The last street ends largely in the green after a muted session. Nifty and Sensex post a record close. Bajaj Auto and Hero MotoCorp bat for the Bulls. Top two gainers in the index. Mid-caps underperform the blue chips today.
Finance Minister Nirmala Sitharaman says facts put forth by SEBI Chief Madhvi Puri Buch refuting allegations made against her must be taken on board. For investors in equities and F&O, her advice is rely on authentic information.
Tata Consumer Products CEO tells CNBC-TV18 a rural recovery is on, but double-digit growth is some time away. He, however, expects the salt to sauces major to grow its base by 10%, with acquisitions adding another 5 to 6%. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we get you everything you need to know as we prepare for the next trading session. Today was a bit flattish, a bit quiet. I'm Prashant. With me, my colleague Sudip. Sudip, hi.
Hi, Prashant. So, quiet day, but not too much lost. I think it was just some consolidation and the market pausing for breath.
Yeah, just, a drift higher and the market ending about 20, 30 odd points up. But it's up. That's the important thing, right? The Nifty, of course, is making new highs. The Bank Nifty was not so lucky. It ended absolutely flat. Actually, it was just taking between green and red, and there was no change by close. A little higher, 35 points on a 52,000 index. Mid caps and small caps, a little sort of quieter as well, more down than up in terms of declines to advances ratio. There you go. Those are the two indices in mid and small caps. Sectorally as well, no clear thrust or tilt one way or the other. There was a bit of this and a bit of that. I think the big global talking point is the Fed decision, and I think we're just sort of biding time going into that one.
Absolutely, because no major moves from global markets either, so it's just sort of treading water till that event is out of the way. Though one must say that today was one of those days when the broader market ended up underperforming. So while at the headline level, the Nifty managed about a 20-25 point kind of an up move, the mid-cap index was an underperformer, and you did have almost 1,500 stocks on the declining side. If you look at the crisscross lines, just about 900 to 950 stocks advancing, but more number of stocks on the declining side. So that indicated lack of action in the broader market as well. In terms of sectors, hard to pick trends, but generally speaking, there was some move back towards defensive stocks. Some of the FMCG majors were doing okay. Some of the two-wheeler stocks had a good ride today. Hero Moto and Bajaj had plenty of takers, as did some of the private banks. But then again, these are not very clear trends, and the gains we're talking about could be very, very minuscule. But what did stand out was that for the second day running this week, PSU stocks, PSU banks, and even other PSU stocks, generally there's some profit-taking that continues on that side of the market. And we'll tell you a lot more about this as we go forward. So here is the lineup. We'll start with the top movers and shakers of the day. Hormaz will fill us in on all the stock-specific action. In terms of stocks in focus today, Ola Electric all charged up on the back of some positive brokerage commentary that came through. The new entrant on the block, Gadgil, starting off in style with a 70% pop. Bajaj Housing Finance continue to rise higher as well. So all those stocks coming up in our stock spotlight. And then, of course, we will get to all the key market events to watch out for in tomorrow's trading action. So it's a packed show. Let's straight away get to the action. Over to Hormaz for all the stock-specific movers and shakers. Hormaz.
One of those very few days, as you mentioned, right, when the broader markets ended up underperforming, and PSUs were one of them that saw a bit of selling pressure compared to what the broader market indices saw in general. And almost all of the constituents of the PSE index saw some losses in today's session, from HAL to BHEL, all of them seeing losses of anywhere between 1% to 4%. On the flip side, it was a very good day for chemical companies. Neogen Chemicals, on the back of that very bullish note coming in from Avendus Spark, 12% higher there. Aarti Surfactants also 16% surge, and even the rest of the stocks managed healthy gains in today's trading session. So a lot of brokerage action coming in on some non-chemical companies as well. Bajaj Housing Finance, we'll get to that in just a bit, a 10% circuit. Ola, another 9% surge today. MGL and IGL after that bullish UBS note, off the highs of the day, but managing healthy gains of anywhere close to 4%. Volumes, the stocks that did well on the back of the volume movers there. Blue Dart had a very good day on very very strong volumes, 10%, a 10% move on Century Ply as well, and Lloyds Metal and Thermax also had a good day. And lastly, BLS International is a block deal that took place in the stock later this afternoon, and after that block deal, the stock saw a bit of a correction there, 4.5% lower after almost 1% equity changed hands in the block deal. Back to you guys.
All right, thank you very much, Hormuz, for that. So that's a quick wrap-up of what went up and down. Well, let's quickly bring in our guests as well. Sudip Bandyopadhyay of Inditrade Capital is with us. Jay Bala of Cash the Chaos is also with us. Gentlemen, good to have you both. Jay, thanks for waiting. Sudip, thanks for joining. Sudip, if I can start by asking you to characterize the moves we are seeing and what should we expect from post tomorrow? Is it going to be something different or is it going to be similar? Similar is good. Different, we don't know.
Well, Prashant, I think it's quite on the expected lines. We have heading into a big event. Market is at all-time high levels. So a bit of consolidation, bit of movement in a range is par for the course. Yes, of course, Thursday morning, we will have some kind of reaction. And that, again, depends on whether it's a 25 basis point cut or a 50 basis point cut. And, what's the commentary along with it? We will have the US market reaction as well. And we will kind of react to that. The way I envisage things, I think it will be for the good of Indian market. The US market is waiting for interest rate cut, and interest rate cut definitely helps whole lot of Indian sectors and including IT, because traditionally IT performs well when US interest rates come down. Many other sectors will benefit, and on top of it, FIIs, provided they get back to that risk on board, I think money will start coming again in a big way to India. So, in that scenario, Prashant, we'll have a Goldilocks kind of a scenario. We already have a significant amount of domestic flow hitting the market every month. And on top of that, if we have a lot of foreign investors bringing in their money as well, I think Indian market will probably move towards a completely different orbit.
Will be nice to have that. We'll foreign money plus all this domestic liquidity, right? $4 billion coming into mutual funds every month, like clockwork now. Jay, you're a bit cautious though. Only near term or even otherwise? So for those who are watching and those who are trading into tomorrow, what would your advice be?
Yeah, I think you've got to go extremely light. The markets are looking quite tired. And even for the banks, as I've been pointing out, it's ICICI that's the only one that's lifting the markets. And SBI needs to stay above 760, 735. And going into the event, the markets looks like it's priced in. Even if it's a 50 basis point cut, it looks like, as the probability points out from the Fed futures, that the markets are probably priced in. So any surprises are likely to be to the downside. But this is a strong trend, no preempting the market until the markets go below supports, and the supports are about 24,753. So until that point, stay on the edge, but be slightly bullish.
Okay, all right, got it. Stay on, gentlemen. We'll come back to you with more questions. Moving to the first stock of the day, and this was Ola Electric. Now, the stock soared almost 10% after brokerages came out with some very positive updates on Ola Electric. Two new initiations. Vinny Motiwala is joining in with all the details. Vinny.
So yes, two brokerage news that have given a thumbs up to Ola Electric and actually initiating coverage buy calls. BofA is the first one. Target price is what they've given is 145 rupees per share, indicating almost a 36% uptick from yesterday's closing price. So keeping an eye on that one. They're positive. Why? Because they believe that Ola Electric has the right to win, given that the technology as well as the cost leadership is something that will work out well for Ola Electric. Other than that, they're highlighting that in terms of the battery making also, there are a lot of opportunities that could work out for Ola Electric. So yes, a thumbs up coming in from BofA Securities. And the other one is Goldman Sachs. So they also quite positive. They have given a target price for this one at around 160 rupees per share, implying a 50% upside from yesterday's closing price. Ola's electric market share is quite high. They have around 32% market share as of August 2024. And in their view, they're seeing that the company is quite positively levered for long-term structural trends, especially in India's this two-wheeler market, electric two-wheeler market specifically, is expected to see a sharp run-up. Other than that, lowering running cost is something that could work out well for the company versus the ICE two-wheeler vehicles, and declining battery costs and new addressable market share for Ola Electric specifically could be something interesting watching out for, and they expect a break-even, EBITDA break-even by FY27. So yes, keeping an eye on this one.
Okay, got that, Vinny. Thanks very much. Let's quickly talk about the other stock in focus. This was, of course, the day's listing. It was another good one. PN Gadgil Jewelers made a very strong debut at the bourses. The stock listed at a premium of almost 73 rupees to the 73%, beg your pardon, to the issue price. Mangalam is here with the details. Mangalam.
But it was a stellar listing for PN Gadgil indeed, over a 70% listing premium to its issue price of 480 odd rupees. And there were four reasons for that. One, there was strong demand for the IPO. Overall subscription was close to 59 times, led by qualified institutional buyers who bid the IPO almost 137 times more than what was asked for. And secondly, in the interim, gold prices continued to rally as well. Gold is at a record high ahead of the FOMC meet. The third part was that in the interim of this IPO, we did see a sharp surge in a lot of these regional jewelry players, the likes of PCJ, Moti Sons, TBZ, all of them rallying anywhere between 30 to 60% in this month itself, notwithstanding gains of 15 to 18% coming in from Kalyan and Senco as well. The company was offered at 42 times trailing and now is trading at around 70 times trailing after this up move that we're seeing. From the commentary that we heard from the management today on our channel, the one that really stood out was that 65% of their gold is unhedged, which implies that with the rally in gold prices, maybe over the next couple of quarters, we will see a large amount of inventory gain coming by as well, 6 months from here on until the company reduces its unhedged exposure to 20% as promised as well. The other thing is that they are looking at margin expansion via increase in studded ratio and revenue expansion via increase in stores itself. When they joined us when the IPO opened, their long-term targets for revenue were close to 10,000 crore with double-digit margins for FY27, 15% of their revenue coming in from studded ratio itself. So you plug some of those numbers and look at forward valuations. Even if, the company sees a reduction in their finance costs, increase in margins, and also an element of inventory gains, and the net profit from last year of 154 crores doubles to around 300 odd crores. 1 year forward, the stock is trading at 37 times, which is at a slight premium to Senco, which is currently at around 33 times, and obviously a discount to Titan and Kalyan, which at a much larger scale are trading at valuations of 60 and 52 times respectively.
All right, Mangalam, thank you very much for that. So that's PN Gadgil, the new kid in the block. Sudip, let me ask you, have you managed to take a look at this? Because, listing gains are done, but nowadays with the market we're in, it makes sense to give it a deeper look if you've not looked at it already or you're not applied, because sometimes there's money to be made post-listing and decent money. I don't know, it'll happen with PN Gadgil, but your thoughts?
I think, the market is really excited about all these jewelry companies. I'm little careful, I would say. PN Gadgil, Moti Sons, and all these are very small operational base, and they are regional players. As we were discussing, I think 65% of their business is coming from one single town, which is Pune. Yes, we are assuming a lot of expansion going forward, a lot of change in business mix started becoming higher proportion, which will give them larger margin. But this is in the realm of future. We haven't seen that happening as of now. And, to assign them a multiple, which is significantly higher, I think I'm a little careful. Also, as a strategy, keeping 65% of their gold unhedged, I'm not sure that is the right strategy. Yes, they're talking about bringing it down to 20%, but I think I'll be a little careful at this stage. The valuation, the listing, everything is great, but I think I'll give it a pass. The same will apply for some of the other smaller jewelers like Moti Sons and all, Jaipur-based guys with few stores. I think one needs to be really careful. If somebody has to play the jewelry space, I think Kalyan and Titan still remains the better bet. They have a large base, proven credentials, track record, and I also feel much more comfortable when their gold position is hedged. because they are not speculating on the gold. They're not gold traders. So, keeping that gold position hedged probably is the right strategy.
Okay, all right. Got it. So that's a view on the jewelers and the sharp moves that we've seen, including in today's listing. Speaking of listings, that brings us to the next stock of the day. And this was, of course, yesterday's listing, which continued to rise higher and higher today as well. Bajaj Housing Finance put on another 10%. Now, Phillip Capital has turned bullish on the stock. Back to Hormaz to get some details here. Hormaz, I believe the target is 210. So what's going behind all this optimism?
3x its IPO price, but then we have already discounted almost 150% of that already in just 2 days of listing. So yes, Phillip Capital, the first buy recommendation on Bajaj Housing Finance within a day of its listing. They have now come out with a buy recommendation, a 210 rupee price target, potential upside of around 27% from yesterday's closing levels, of course 3x from its IPO price. What is driving their bullishness now? Phillip Capital is saying that Bajaj Housing Finance, when compared to its peers, is in a league of its own, and over the next 3 years, they are expecting the company to have a balance sheet of almost 2 lakh crore rupees, considering the risk-free loans that they plan to have. Now, they are also expecting credit costs to remain benign in the near term. And what is driving their bullishness in particular is their acute focus on the salaried housing loans, their steady expense ratios and benign credit costs, which they are expecting. And as a result of which, they will see that their return ratios are very strong. And that is what is driving Phillip Capital's optimism on Bajaj Housing Finance. So bullish commentary coming in there. New listing, another 10% added after a stellar listing yesterday. Back to you.
No, Hormaz, thank you very much for that. Sudip, again, Bajaj Housing, a lot of course, there is interest, but valuations, as Deepak Shenoy was telling us earlier, according to him, now nearly 8 times price to book. I saw 6.5. But depends on what number you take. So it's a little, it's stretchy now. But what's your sense?
It is definitely stretchy, Prashant. I think it's a great company. They've done good work, and I'm sure they will continue the good work in the future as well. But the valuation comfort at around 7 time book for a finance company, NBFC, whichever way you look at it, I think is a stretch. So I think I will recommend investors to wait for some time, let this euphoria around the listing die down, and maybe watch for a couple of quarters, then get into Bajaj Housing Finance. You may end up getting at a slightly higher value also, but I think that will be the right strategy instead of jumping into it. Post the period of mandatory lock-in getting over, there will be some sellers coming in, big sellers coming in. Let us wait and watch. I'm not saying at all that the company has any problem. It's a fantastic company. And overall housing, we are positive. But if somebody has to buy a housing stock, I think Repco Home Finance, HUDCO, I think these are looking attractive considering the valuation at which these are quoting.
Okay, yeah, definitely this marquee listing, it's definitely put the spotlight very much back on the housing finance space. That point is well taken. In fact, on that, let me actually bring Jay back in. Jay, we discussed 2 different themes, housing finance and also this rise in jewelry stocks. So just tell us, looking at the charts, is there anything where you see a trade, anything that you like?
Yeah, if you look at gold as such, that will give you a more comprehensive view of what jewelers are going to do. I'm anticipating gold prices to touch about 2,800 in the short to medium term. I anticipate pullbacks to be shallow, so they still have, probably have more juice left. And as long as gold prices can keep going up, I think jewelers will have the tailwind. And like you recall last week, I had mentioned food, clothing, and chemicals as an evolving theme going forward, and that's the reason why you see chemical stocks rallying this week. So if people have risen to us, they should be able to monetize this.
All right, Jay, thank you very much for joining us. Food, clothing, chemicals, that's the theme. I think, yes, Jay mentioned that last time as well. And thank you, Sudip, for joining us as well with that perspective. We'll take a quick commercial break here. We'll come back, get you from the sort of key points that we got from corporates we spoke with through the course of the day, and some of the events to watch tomorrow as well. Stay tuned. All right, welcome back. You're with us here on Markets Forward. Let's take a quick look at some of the top corporate voices that we heard from through the course of the day. Tata Consumer Managing Director and CEO Sunil D'Souza was with us on the channel. He said rural space is starting to catch up with the urban market, but double-digit growth, according to him, is still some time away. He added that they're seeing impact fluctuating commodity prices, which are still on a topsy-turvy ride. They're forecasting single-digit volume growth in their tea and salt businesses, but expect recent acquisitions of Ching's and Organic India business to contribute positively to growth going forward.
Orchid Pharma Managing Director Manish Dhanuka told us that revenues from their new molecule, or NCE, will reach about $1 billion over the next decade, with peak revenue anticipated to start in 4 years' time. The company is expected to earn 6 to 8% of this revenue as royalty. Additionally, the top-line CAGR growth rate expected is 20%.
Well, Bajaj Auto's Executive Director, Rakesh Sharma, was with us as well. He said they're looking at doubling their Triumph sales with new motorcycles. At present, they're selling between 3,000 to 3,500 Triumph bikes in India per month. They're also looking to increase Chetak's capacity to between 35,000 to 40,000 units by the end of FY25. Well, that's not all. They also spoke about the PM eDrive scheme, and they said the government's strong support towards transitioning from ICE engines to electric vehicles and fostering a new segment and positioning India as a global EV leader is a welcome step.
And before we wrap up, let's bring you some of the key market events to watch out tomorrow. Upasana is here with the details.
Well, let us look at the important economic cues to watch out for tomorrow. UK and Europe will be reporting its August CPI data. Now, coming to US markets, it will be reporting its weekly crude oil inventories data. And mind you that the FOMC's decision on interest rates will be out tomorrow, following which Fed Chair Jerome Powell will hold the press conference to elaborate on the policy outcome. Now, let us look at what are the key stocks that we'll be closely watching out for based on the corporate action. Finolex Industries, Nykaa and Shipping Corp will be in focus, as all these three companies' AGM is scheduled for tomorrow. SBI Cards and Payments, Aavas Financiers and even Nazara Tech will be in focus, as the board meeting is scheduled to consider fundraising. Jupiter Wagon will also be in focus, as the board will consider dividend, and RPG Life Sciences will also be in focus, as the company will be holding its Investor Day. Now let us look at what are the other key events in focus. Finance Minister Nirmala Sitharaman will be launching NPS Vatsalya scheme tomorrow, and also the polling of first phase of assembly elections in Jammu and Kashmir is also set to take place tomorrow. So all these are the important cues that we'll be closely watching out for.
All right, Upasana, thanks very much for that. Well, it's a wrap on this edition of Markets Forward. From Sudip, me, everyone on the team, it's goodbye. Thanks for watching. News and updates in just a bit.